Contrasting results from Chinese internet companies Baidu and Sina overnight. Baidu saw a 14-fold increase in profit and sales trebled. Sina saw profit fall 32%. Its costs surged and it lost its chief executive. For a closer look, let's speak to Chaw, who's the managing director of China Knowledge as a business consulting firm. Mr. Chaw, thank you for joining us today. Let's take a look at Baidu's numbers at first, which on face value seem the more impressive. Were you pleased with what you saw there?
Oh, it's very fortunate that they can attain $4.4 million US dollars for the first quarter, because that will put them not in a too high of PEs. As we know, when they first listed, they have a PEs of about 200 times. Now, looking at this level, 4.4 million, if add on with, assuming it's consistent or a bit more, then we're looking at PEs at 100 times. Given the only 1 year of listings, I think investors will give them some time before they could reach that level of Google, 60, 50 times.
Yeah, okay, well, I'd like to talk about valuations in just a moment, though. Let's take a look at Sina's results as well, because, as I said, first quarter profit down 32%. Chief Executive Yan Wang resigned as well. The company's increasing its costs as it tries to develop search engines that can compete with Baidu and Google. Is this a company in trouble?
No, I don't think so, because myself, I have visited most of these NASDAQ-listed Chinese internet companies. Now, from bottom level to the high-up level, the problem in managing such an internet company is the movements of people, be it senior operation marketing in and out. So this is a temporary hiccups. I think Sina might have overspent in developing new products, new engines. So it's sidetracked a little bit. But if you look quarter to quarter, it is very stressful for the management to run business and to attain profit all the time. Now, if you look at the big pictures, we know by 5 years, 2010 in 5 year times, you're going to see 3 times increase in advertising revenues, user from current of 150 million to 230 million. So the big pictures are there. It's just how they're going to be there, and of course they can sustain, and good leadership to drive these companies to achieve the potentials of Chinese internet companies.
Okay, well, let's talk about those valuations, as you pointed out there. Starting with stock prices, for example, Sina.com is actually up about 18% year to date. Baidu.com is down 2.5% year to date, but that doesn't take into account the surge in after-hours trading in the US, a gain of about 22%. So net, they're actually both up about the same so far this year. Baidu trades at 13 or so times book, 112 times estimated PE. Sina is 4.7 times book and 38 times estimated PE. So Sina is much cheaper, but in either case, do you see these stocks as potentially overvalued in the short term?
No. Okay, let's look into Baidu.com. Now, even you're looking at about 100 times PE or more, given 1 year in listed, interesting about Chinese internet companies, if you look back 3-5 years ago, most of these listed ones like NetEase, Sohu, they have problem of getting revenues, and their profitability was not so good. And what happened was it was messages, phone messages that brought in new revenue. So this is very different from the United States model or in the West, the internet companies. So I believe these companies, internet companies in China, would evolve. And how they achieve revenue from other sources is a big question mark. And to see some breakthrough in achieving revenues of different from other Western models would depends on the leadership of for Robin would be of course Baidu, and then of course Sina will have to think of a way to achieve other forms of revenue, because it's very interesting, because just 3-5 years ago that kind of model would have never happened in the West, So I think given time, things would evolve. Revenue model would start to surface in different forms. Now, I think another thing to be concerned about is Alibaba. Alibaba has Alipay, has Taobao. Formidable players. I know. I went to Hangzhou. I went to the HQ. They're very strong, and they might move into Baidu territory, and then they are going into content maybe or news, and then we're going to challenge Sina or Sohu or NetEase.
Longer term, when we're talking about, say, through to 2010, iResearch says the number of net users in China will double to about 232 million. Are there risks here, though? Is this guaranteed growth in the net market, or is the government likely to interfere, as it has done in the past, in internet usage, closing down internet cafes, restricting access to content? How much risk is there?
No, I don't think so, because it's not good for the Chinese government to control, because flow of information is very important to China economy, and the government has to face it, because with technology information, we only make Chinese economy stronger, and not to stop the increased number of internet users. That is doesn't make sense at all. So it's a natural move, looking at 1.3 billion people, and schools are using internet for education as well, in fact. And it is a natural move. The point is, would the advertising revenue increase as predicted? We're looking at about 600 million last year, and it's expected to go to raise about 3 billion. My personal gut feel is going to exceed that, because with more credit cards usage and a more efficient banking system, I think there'll be a lot of transactions online, and that will not only help the e-commerce but also advertising online. Yes.
Okay, Mr. Chaw, thank you very much for joining us today. That is Charles Chaw, Director of China Knowledge, joining me on the program. Plenty more to come on Bloomberg Television. We're going to be back in just a moment.